Good evening, and welcome to today's financial report. Let's start with last night's performance on Wall Street. The three major indices closed virtually flat, with the NASDAQ at 25,520, the S&P 500 at 7,457, and the Dow at 52,146, all showing 0% change. However, futures were pointing higher before the open, with NASDAQ futures up 0.75%, S&P futures up 0.4%, and Dow futures up 0.24%. This suggests a slight recovery in sentiment after a series of losses. Looking at key individual stocks, Nvidia closed at $202.81, up 0.16%, Tesla ended at $380.84, up 0.21%, while MicroStrategy fell to $94.85, down 0.14%, continuing its recent weakness. Overall, there were no significant outlier stocks with single-day moves exceeding 8%. The market appears to be in a phase of stabilization on lower volume after an oversold condition. However, rumors of downward revenue revisions ahead of tech earnings are still weighing on bullish sentiment. Now let's turn to the global macro environment. The 10-year Treasury yield rose to 4.56%, climbing for a second straight day, reflecting a marginal tightening in interest rate expectations and a cooling of the liquidity-driven trade. The VIX Volatility Index stood at 18.11, still within the normal range of 15 to 25, but notably higher than 16.72 a week ago. This indicates that while the market remains cautious, it has not yet entered panic territory above 25. The US dollar index edged higher to 100.89, up 0.18%, ending its recent downtrend and putting short-term pressure on emerging market assets. In commodities, WTI crude fell 2.26% to $81.73 a barrel, giving back the geopolitical risk premium from the previous day, suggesting doubts about the sustainability of the Iran-Israel conflict. Spot gold traded at $4,013.20 an ounce, hovering near its highs, supported by safe haven demand. In summary, global markets are in a risk-off mode, driven by a combination of geopolitical tensions and trade policy uncertainty. If the VIX drops below 16 and the 10-year yield falls back to 4.4%, risk appetite could recover quickly. On the renminbi front, the onshore rate was at 6.7560, and the offshore rate at 6.7679. The renminbi has been strengthening recently, with the onshore rate hitting a new high since December last year. The appreciation is mainly driven by China's export resilience and the dollar's recent weakness. But with the dollar index rebounding today, the renminbi's upward momentum may slow. A stronger renminbi helps attract foreign capital into shares, but if the dollar index continues to rise, it could weigh on northbound flows. On the trade and tech front, three confirmed events are worth noting. The U.S. plans to further restrict AI chip exports to China, the high-level China-U.S. economic dialogue has been cancelled, and the EU has launched an anti-subsidy investigation into Chinese medical devices. All three are negative factors that could exacerbate risks for export-related sectors. For today's A-share market, we expect a higher open. System data shows the SSE 50 surged 3.01% yesterday, and the CSI 300 rose 1.53%. Combined with rumors of state-backed fund buying, sentiment is leaning positive. But external risks remain, so a higher open could be followed by volatility. If the Shanghai Composite falls below 3,780 within the first 30 minutes of trading, the probability of a high open and low close increases. Looking at today's A-share outlook, the Shanghai Composite is likely to be range-bound with a slight upward bias, and a positive close is probable. The index closed at 3,796 yesterday, above its 5-day moving average, but the Shenzhen Component and Chinext were weaker, showing clear structural divergence. If the Shanghai Composite breaks below 3,750 at the open, the trend could shift to a correction. In terms of sector focus, utilities and power stocks have been recommended over the past 5 trading days. They have delivered relative returns in a weak market, reflecting a clear defensive preference, and the long-term demand logic for data center high-voltage transformers remains intact. The SSE 50 heavyweights, including large financials and state-owned enterprises, are also in focus. State-backed fund buying rumors are concentrated in this area, and the technical breakout on volume suggests short-term momentum could continue. Sectors to watch out for include U.S. tech-related stocks, such as semiconductors, AI computing, and consumer electronics. With new AI chip restrictions imminent and earnings warning rumors circulating, these sectors face medium-term headwinds. Although NASDAQ futures rebounded before the open, a share counterparts may not follow the upside and could be more vulnerable to declines. For northbound capital, a net inflow today is slightly more likely, given the renminbi's appreciating trend and a share's relative valuation appeal. Keep an eye on the cumulative net flow in the first 30 minutes. If selling exceeds 20 billion yuan at the open, the outlook would shift to net outflow. Now for the stock radar. In the current weak market environment, there are no qualifying positive opportunities. For existing positions, Japan's NP substrate, data center transformers, silicon photonics, coherent optical modules, and CoAS test equipment all show relative resilience. The recommendation is to continue holding without adding. On the risk avoidance side, gallium arsenide substrates and BAW filters carry significant downside risk. The advice is to exit or avoid these names, and do not try to catch a falling knife. To summarize today's core judgment, geopolitical and policy uncertainties are suppressing risk appetite. A share heavyweight sectors are providing support, but tech stocks face pressure. Be cautious of volatility ahead of the weekend. Our probability assessment is 30% for an up day, 45% for a sideways move, and 25% for a decline. Thank you for watching, and we will see you next time.